If you are standing on the edge of retirement, or if you have already crossed that finish line, I need you to pause whatever you are doing and look right at me. We need to talk about the single biggest threat to your financial security in retirement. It is not the stock market. It is not inflation. It is your lack of knowledge about taxes. I want you to think about how hard you worked for 40, maybe 45 years. You sacrificed. You skipped vacations, you drove the older car, and you packed away every single dollar you could into your 401k or your traditional IRA. You did exactly what everyone told you to do. You looked at that final number on your statement, and you thought, I did it. I'm safe. But let me tell you the brutal truth that nobody wants to face until it is too late, that number on your account statement? It is not all yours. It is a joint account with Uncle Sam, and he is waiting to take his cut the second you start pulling that money out to pay for your groceries, your utilities, or your medical bills. The biggest fear I hear from people just like you every single day is the terror of running out of money. You are terrified that you will outlive your nest egg. And yet, so many of you are walking into retirement completely blind, completely unprepared for the tax bomb that is waiting to detonate in your lap. You think taxes are a problem for when you're working, and that once you stop working, you magically drop into a 0% tax bracket. It is a myth. It is a dangerous, catastrophic lie that can wipe out 30 to 40% of your purchasing power if you don't wake up right now. Let's address the most basic question you need to answer. How is your money actually taxed when you stop working? When you were working, you paid taxes on your paycheck. Simple. In retirement, every single bucket of money you own has a different set of rules. If you are pulling money from a traditional 401k or a traditional IRA, every single dollar you withdraw is taxed as ordinary income. Read my lips, ordinary income. That means it is taxed at the exact same rates as a standard paycheck. If you take out $50,000 to live on, the IRS looks at that exactly the same as if you earned $50,000 working at a local store. You didn't just get a free pass because you retired. Then there is Social Security. This blows people's minds, and it makes me so angry because it is so unfair. Did you know that up to 85% of your Social Security benefits can be taxed? It is based on something called your provisional income. The IRS adds up your adjusted gross income, any tax-exempt interest you have, and then they add in half of your Social Security benefits. If that total number goes over a very low threshold, just $25,000 for a single person or $32,000 for a married couple, they start taxing your benefits. Think about that. You paid taxes on that money when you earned it, and now they are taxing it again when you need it most. And don't get me started on the biggest trap of them all, required minimum distributions, or RMDs. The government let you defer those taxes for decades, but they are not patient forever. When you reach a certain age, the government steps in and says, time is up. You must take this specific amount of money out of your traditional retirement accounts every single year, whether you need it or not. And guess what? If you don't take it, the penalty used to be 50%, and even now it is a massive 25% hit on what you should have taken out. If you have a large traditional IRA, those RMDs can push you into a much higher tax bracket, trigger higher taxes on your Social Security, and even increase your Medicare premiums. It is a vicious, compounding cycle, and it happens because people don't plan. So, what is the actionable takeaway here? What are you supposed to do about this right now? First, you must understand the power of tax diversification. You cannot keep all your eggs in one traditional, tax-deferred basket. You need a tax-free basket, and that means looking into a Roth IRA or a Roth 401k. Money coming out of a Roth account in retirement is completely, 100% tax-free. If you are still working, start directing new contributions there. If you are already retired or about to retire, you need to talk to a qualified professional about doing strategic Roth conversions. This means moving money from your traditional IRA to a Roth IRA now, paying the tax today while rates are historically low, so that money can grow and be withdrawn completely tax-free later. You are taking control of the tax rate, rather than letting the government dictate it to you 20 years from now. Second, you need to manage your income brackets year by year. Retirement is no longer about putting your money on autopilot. It is a game of strategy. You need to look at your income every November and decide exactly which bucket to pull from to stay just under the next tax bracket line. Take a little from the traditional IRA, a little from the Roth, a little from your taxable savings. You mix and match to keep your official income as low as possible while still getting the cash you need to live beautifully. Do not let fear paralyze you. The fear of taxes disappears the second you replace it with knowledge. You work too hard, you sacrifice too much, to let Uncle Sam take the lion's share of your hard-earned peace of mind. Take control of your retirement tax strategy today, because you are worth it, and your future security depends on it.